Good afternoon. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is July the 14th, 2010. Happy Bastille Day. And the topic for the day is caution flag for gold. This video is meant for instruction and entertainment purposes only. It's not a solicitation to buy or sell any security. A purchase or a sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Well, good evening, and I think I'd like to share a few thoughts about the topic of gold and what's happening lately. It's been a bit of a disappointment for the last month or so. Let's explore a little bit of the reasons why we're having that difficulty and see what we might ascertain out of it. So without further ado, let's go to the gold chart and take a look. What we have here is a weekly chart in gold, and I thought I'd start off with a big view. This Elliott wave pattern goes all the way back to 2001, and you can see here that in the last 5 years that I'm showing, we have waves 3, 4, and 5, and by golly, we're sitting right on the trend line as we speak right now. So I want to urge a bit of caution. This is a caution flag here for gold, because the low this week was 1186, and if we see any low deeper than that, the chances are good that this longer term trend line has been broken. So we may dispute the count, we can dispute a lot of things about this chart, but a rising wedge pattern is by nature bearish. So when we see the trend line on that wedge broken, it's time to look for other things. So let's take a change over now to the daily chart, and we'll zoom in on the last year or so of gold. So let's do that right now, and you're going to see here that I've zoomed in on again on waves 3, 4, and 5, and you can see again we have the same pattern, but in this case the daily chart has broken the wedge formation. So we've got a smaller wedge on a daily, smaller than the weekly wedge that I just showed. So let's go back to that a minute. Here's the weekly. That's a much larger wedge, but within that we now have a wedge on the daily chart as well, and that does appear to be broken. So, and you can see here the low this last couple of weeks has been about 1185, and so I dare say that this 1185 number is probably where it touched the weekly trend line. And now, if we see a violation of that 1185 number, the chances are good the weekly wedge is broken as well. Let me just say that gold, when it has a wedge formation like this, will completely retrace that wedge formation. So here we have the daily formation. We know that gold will probably completely retrace back down to 1,000 based on the daily chart. If we go to the weekly chart, we know from this that a wedge, a bearish wedge, which this is, will completely retrace to 681 and maybe even deeper. So this is a word of warning to those folks that are out there. This is not a time to hang on to gold. One of the things I do advocate is to have a small amount, not for investment purposes, but rather for safety purposes. You might say gold is the alternate currency. So, but as far as owning the metal and owning it for investment purposes, we've had a great run since 2001. I hate to say it, but it's probably over. By the way, gold is known to have a 9-year cycle. So if you look back, the beginning of this cycle was June 2001. We've peaked out roughly in June of 2010. So it's been pretty much a straight-up 9-year cycle. Usually the 9-year cycles are measured from bottom to bottom. this one is unique. It's the longest cycle in gold that we've seen in maybe in history. So just for the sake of that discussion, let's just say that it's been a good run while we've had it, and hopefully you can pare back a little bit and understand that gold has a significant amount of retracement to do. I offer a daily newsletter, and I'd like to offer it to you right now. We've got 3 months. This is July the 14th. Let's call it the 15th. We've got a 3-month period running through October the 15th. The normal price for a quarter is $100. At this point, I'm now offering the newsletter for $70, which is the cost of 2 months. But please take note that this subscription will go through October the 15th. So if this is something that you would like to inquire about and get a free copy, by the way, you can email me at tonyc@thepracticalinvestor.com, or you can go directly to www.thepracticalinvestor.com, and there's a contact page where you can get hold of us. So please take warning here that we've got a daily break in the wedge formation. We're sitting on a potential weekly break in the wedge formation. When that weekly break runs, it looks like we've got a long slog here to the downside. So hope you have a great summer, and I look forward to talking to you again sometime soon. Please enjoy your summer, have fun at what you do, and do the right thing. Thank you.